everybody. Thanks for tuning in to another episode of I'm going to get it, I promise. Hey, everybody. Thanks for tuning in to another episode on Square One. Our previous episode, we spoke about the fundamentals of a stock, and this time we're going to talk about the technical side and how to kind of analyze a stock from that perspective. Take it away, Danny.
All right, so we're going to go initially on FinViz. I like it because anyone can use that. You don't need an account or anything funded. And the good thing with it is it does pre-populate a lot of the most commonly used and referenced technical indicators that you want to start out with, as far as a simple moving average and resistance and support lines as well. Starting from the top, I will address these three little things right here on the left here. So you have SMA, which is a simple moving average. And then the number is the interval for the number of days actually affecting that moving average. So the shorter interval will lead to a faster moving line, as far as 20 days of trading, 50 days of trading, and then 200. Ideally, you want these to be sloping upwards, because that means the stock is on an upward trajectory. But in this situation, that's going to be rare given the abrupt sell-off in February and March. So what you're looking for here at least is an upward start to the move, which has already occurred with the 20-day average for Disney, and will occur for the 50-day in the next probably 2 weeks. Once they typically cross over the 200 is when most technical analysis will say that the stock is healthy and performing well. Right now they're inverse, so it's a warning sign that there has been some weakness, as you can see, and there's reason for caution. But you're getting it at a good discount, at least at this point, at 104.
When you're looking at these SMA lines, when the candlesticks are below the SMA line, that's a good time to buy, or how does that work exactly?
It is. You don't want to chase a stock higher, because you're opening yourself up to that revisit where, let's say you bought in after it had tested the 200-day moving average here around 130, and you bought in at 150 thinking this thing was going higher. There's just such a gap here that inevitably these stocks do tend to test at least the 50, if not the 200-day moving average. So you want to wait until at least it's closer. Once it starts to diverge, right there you would have saved yourself $10 if you just waited for that test. And then the only issue is if it does break it abruptly, like I said, you can have a large decline at that point. So ideally, you do want to buy when it's in this situation. It is rare typically, but you want to buy when it's well below the 200-day moving average, because that means everybody else before you has paid a lot more for this stock. So it's more likely that you're going to get it at a good price because of that. The other thing that I like about FinViz, it does autofill in some trend lines for you. It has autofilled this trend line as a function of lower support, and then it filled in this top line as a function of an actual resistance line for Disney. So you can expect it to trade more than likely between these two ranges. And it's probably a good buy if it's near the blue line, and probably not a good buy if it's heading towards that purple line where it's more likely to reach resistance. So every time it gets close to 140 or 130 as time goes by, they're more likely and more inclined to sell and realize whatever gains they may have, or just some losses, and just get out. And on the flip side, this blue line, you typically have an exhaustion of selling, and that's where bargain buyers will jump in and say, you know what, I like Disney at 80, 85, whatever the case is. So the good thing is FinViz will auto-populate those lines for you. So whatever stock you want to pop into there, it will show it and help you out as well. So now we're going to switch over to Thinkorswim. It's part of TD Ameritrade's software for trading. It's the platform I prefer to use. I actually execute through Interactive Brokers, but I do all my actual analysis and monitoring of the market using Thinkorswim. So this is Disney over the last year. I like it. It'll show you their earnings over the last 4 quarters, and if they pay any dividend payments as well when they've been issued. This is the default settings pretty much here. I have it set to daily time frame over a year, and on candlesticks. We're going to touch base on another episode on the actual reading of candlesticks. One of the first things I do like to look at is volume itself. It speaks, to not use the word again, volumes, but it is actually a very good indicator to the price movement. It puts credence behind a price movement. You don't want to be buying a stock just because it's gone up if the volume isn't matching it. So you want to see volume matching price movements like you saw here. This was the day that Disney announced their Disney Plus subscription base after it had just been rolled out. And you'll see it was actually the largest volume. It actually still is the largest volume in the last year. So that was a pretty good indicator that there was a lot of interest in the stock, and it was going to be a pretty good level to own it at, up until obviously everything changed with coronavirus. On the flip side, when you see a lot of volume on a down day like this, it tends to be a good indicator that sellers have finally met enough buyers where the stock should start to head higher. So there's no coincidence here that the second highest volume day in the last year is actually the low day for Disney when it traded 43 million shares on the day, hit 79 and closed above $87. For now, this is a clean look. I'm going to begin to add studies slowly so people can follow along. You'd right click here, go all the way to the bottom and go to add study. I like just going alphabetically so I don't have to go through all these submenus. We're going to start out with unbalanced volume. This is a good indicator for the overall sentiment of the stock. All the unbalanced volume is just a running total of the volume for the stock. If it goes down, then that's subtracted and it can go negative. And if the stock is climbing, this number will climb with it. It tends to be a pretty good indicator as to the overall sentiment for a stock. The next study we're going to cover, I already added it here, is RSI. You can find it alphabetically like I did with unbalanced volume. RSI is a relative strength indicator. It does tend to work pretty well. You want to be buying when it's close or ideally below this lower bound, which is the 30% or lower figure. And it highlights it here in blue for you as a good indicator to almost say, you want to start pulling the trigger around these levels. And then red indicators tend to be an area where the stock is overheated. That's why it's red. A lot of people are buying it, and it tends to be an area where the stock will meet enough selling or just exhaustion and trade sideways or lower, as did occur with Disney, where it just traded sideways before any sort of coronavirus or any other stock market weakness even appeared because of that overheated level, basically. The ideal thing you want to see is a low here and then higher lows from there to indicate that the selling is waning. As you'll see here, even though Disney itself hit a new multi-year low at $79 and had a very high volume day, the relative strength indicator was actually significantly above the previous lows, the fourth actually higher low. So that was a very good indicator that more than likely Disney selling was done and the stock was going to firm up and climb from there, as it has. And now it's right in the middle of it, which is 51. I mean, the indicator range is between 0 and 100. So 50 is right in the middle of that ballpark at that point. With this indicator, 50 ends up being fair value pretty much for it. You're not really getting a steal, and it's more of a sentiment indicator. So its sentiment has been reset here now that Disney's at 104. But you're not really getting a deal, as you can tell from it having touched 80 and then now rebounded. You ideally want to buy closer to this lower level of being oversold, anything near 30 or lower. It doesn't have to hit 30, and consequently, it doesn't have to hit 70 to be oversold. But it's a warning sign that as it gets closer, the stock is getting either overheated and overbought, or it's getting oversold and looking more and more like a bargain worth starting to buy at that point. I've made the RSI larger so you can see what I was referencing here, where you see higher lows as the stock is still weak, but sentiment and momentum is improving. And even though the stock hit a new multi-year low at 79, at that point, it was already actually almost out of the oversold sector, oversold region, and started to climb from there. And as you can see, the stock performed very well since then as well. So I've brought up a few other indicators here. There are a lot of different technical indicators that people will use and reference. There is no, just saving like grace of just one that works better than the rest. It's kind of just personal preference, but there are other ones that I do use, MACD, for instance, MACD histogram, and the stochastic. But you'll see that they all also kind of tend to mirror each other as far as bringing up the RSI here so you can see it again just for reference. They all kind of start to go up at the same time for the most part. They're a little different in their own regards, but I don't want to overwhelm you with too many technical indicators. But it's personal preference. Use them, kind of get a feel for them, see which ones you like. RSI is a very clean indicator, so that's why I recommend it, along with volume and unbalanced volume.
All right, guys, so thanks for watching the episode. If you enjoyed what you watched, give us a like and subscribe if you haven't already. Our next episode, we're going to talk about the importance of paper trading. Danny paper traded for years before he really even started messing with money. Some of you guys may not have the time or the inclination to do that. So we're going to briefly talk about paper trading and then also talk about if you have an initial deposit of $1,000, what moves you should make with $1,000. Thanks again for watching the video, and we'll see you next week. Thanks, guys. You want to say like something?
Bye.